When we get a brief on payrolls today, what is the run rate of non-farm payrolls between OMG, we're fully employed, and OMG, it's terrible out there? Is it 100,000, or could it even be less than that?
So roughly 100,000 is what you would need if you're seeing the participation rates stable to keep the unemployment rate where it is. Now, the Fed is projecting that the unemployment rate is likely to inch up over the next year or so. And if you look at its long-run projections, suggests that it needs to inch up. So in that case, we're looking at an even lower rate, sub 100,000, unless we are to keep seeing the rebound in participation that has been so strong over the past year, then that's going to push it up a little bit, probably back to 100,000, maybe a little higher.
Who are the people to get us from it's an 100,000 rate to we're actually doing, to pick a number, 170,000? What kind of Americans are those people that are getting the jobs now where we say, well, they really shouldn't be?
Well, we want Americans to have jobs, but when we think of who's driving that rebound in participation, it's been concentrated in the prime age workers, so both men and women. So women's prime age participation, it's at a record high. Interestingly, a lot of that's been driven by mothers, particularly young children, as they're leveraging this remote work environment. But we've also seen a very nice rebound in prime age men's participation. That is linked to some of the increase in immigration that we've seen as foreign-born workers do have higher participation rates, but also just the strength of traditionally male-dominated industries this cycle. So construction, mining coming back, transportation, warehousing, obviously very strong this cycle, and even manufacturing holding in there as well.